Hey everyone, welcome back to Corporate Decoder, the place where we break down the most important numbers in corporate filings. And today it looks like SCI Engineered Materials might be in for a bit of a bumpy ride. Let's dive in and see what the numbers tell us. This is SC Engineered Materials Inc.'s quarterly report, a look at their financial health for the period ending June 30, 2025. When we look at these reports, we're typically searching for the story hidden within the numbers, how the company is really doing, and what it means for its future. Let's start with the balance sheet, which is like a snapshot of what the company owns and owes at a specific moment. First up, we see their cash position. On June 30, 2025, they had about $799 million in cash and cash equivalents. That's up from around $6.7 million at the end of 2024. That's a good increase in how much cash they have on hand. They also have marketable securities, that is money invested in things that can be easily bought or sold. In 2024, they had some investments, but by mid-2025, those short-term investments were gone, and their long-term investments in these securities grew significantly from just over $2,000. They also have marketable securities, that is money invested in things that can be easily bought or sold. In 2024, they had some investments, but by mid-2025, those short-term 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 investments, but by mid-2025. Now let's look at inventories. This is the stuff they have on hand to make and sell their products. In mid-2025, inventories were about $1.07 million down from nearly $1.43 million at the end of 2024. This indicates they sold a fair bit of their inventory, which can be a good sign if sales are strong. Moving over to liabilities, we see their debts and obligations. Their current liabilities, things they owe within a year, were a bit higher in mid-2025 at $1.9 million compared to $1.46 million at the end of 2024. A big chunk of this increase comes from customer deposits, which more than doubled, going from about $337,000 to over $85,000. This means customers are paying them in advance for products or services they haven't delivered yet. This is good for cash flow when it happens, but it also means they have a significant obligation to deliver those goods or services. On the equity side, their common stock value shows an increase from $10.7 million to over $10.7 million. Retained earnings, which is the profit they've kept over time, have significantly improved from a negative $54,000 at the end of 2024 to a positive $1,900 in mid-2025. This shows they've moved from a deficit to a profit over the first half of the year, which is a very positive sign. Now let's look at the results of operations, the income statements. This shows how much money they made and spent over a period. For the 3 months ending June 30, 2025, their revenue was $3.6 million. That's a big drop from $5.5 million in the same period in 2024. And for the 6 months from January to June, their revenue was $7.1 million, down from a much higher $13.9 million, down from a much higher $13.9 million in 2024. This is a pretty significant decrease in sales, a drop of nearly 35% in the first half of the year. The report mentions this is due to product mix and lower volume, which means they sold fewer items and maybe the items they did sell weren't as high value. Gross profit is what's left after they pay for the direct costs of making their products. In the second quarter of 2025, gross profit was $115 million, down from $1.37 million in 2024. But the gross profit margin, that's gross profit as a percentage of revenue, actually improved. It went from 24.9% in the second quarter of 2025. This is interesting. So while they sold less, their profit per item sold went up. This was also seen in the first half results, with gross profit dropping but gross margin jumping from 20% to 31%. This is interesting. So while they sold less, their profit per item sold went up. This was also seen in the first half results, with gross profit dropping but gross margin jumping from 20% to 31.44%. This improvement in margin, despite lower sales, suggests they either got better at managing their costs or they managed to sell higher margin products. General and administrative expenses are the costs of running the business that aren't directly tied to making products, like salaries for office staff and rent. These went up in both the 3 and 6 month periods compared to 2024, driven by staff compensation and IT services. So while they're cutting back on sales, they're spending more on running the company. Research and development expenses went down significantly. For the first half of 2025, they spent about $21,000 on R&D compared to $36,000 in the same period in 2024. This is a decrease of over 40%. They mentioned this is due to fewer research materials and supplies. It's worth watching if this reduced spending impacts their ability to innovate and bring new products to market. And then we come to net income, the bottom line. They reported 36400 in net income for the 3 months ending June 2025. This is down from 526,000 in the same period last year. For the 6-month period, net income was 674,000 to 6,000 in the same period last year. For the 6-month period, net income was 67,400 falls in ball. Now let's quickly look at cash flows. This tells us where their cash is coming from and where it's going. Operating activities are the core business operations. They generated $1.9 million in cash from operations in the first half of 2024, 7,000. In the first half of 2024, this is mostly due to managing their working capital well, particularly an increase in customer deposits as mentioned earlier, which effectively brings cash in faster. Investing activities are about buying or selling long-term assets like equipment or investments. They spent about $215 or investments. They spent about $2,500 in the same period in 2024. They also increased their investment in marketable securities as we saw earlier. Financing activities involve debt and equity. Notably, they had zero cash flow from financing activities in the first half of 2025 and only a small amount of principal payments on lease obligations in 2024. This means they didn't take on new debt or issue a lot of stock. The company focuses on advanced materials for thin film applications, primarily in the photonics industry. They serve markets like aerospace, automotive, defense, and solar. A key point here is their customer concentration. The top 2 customers accounted for a huge 83% of revenue in the first half of 2024. This tells us they are heavily reliant on just a couple of major clients. If something happens with one of those customers, it could severely impact SC's business. They also detail their investments. Their money market fund investments are valued at about $5.3 million in mid-2025, up from $3.1 million in late 2024. This is a good chunk of cash invested safely. They also hold corporate bonds and US government securities valued at fair value. We see here that employees receive some compensation in the form of stocks. This is a common practice. For the first half of 2025, this stock compensation amounted to about $47,000. They have an operating lease for their headquarters. In late 2024, they extended this lease for another 5 years until 2029. The lease payments are detailed here and show a significant total commitment over the next few years. Now let's get into the management's perspective on how things are going. They mention several factors impacting the business like political uncertainties, tariffs, inflation, and supply chain disruptions. They're actively managing these by talking to suppliers and customers and finding new sources. They reiterate the significant drop in revenue, emphasizing product mix and lower volume as the primary reason. They highlight the improved gross margin percentage as a positive despite lower overall revenue. They're watching raw material costs closely. They explain the increase in these expenses is due to higher staffing, professional fees, and rent. This is a bit of a concern when revenue is falling. The reduction in net income is attributed to lower gross profit, partially offset by higher interest income and lower income taxes. As for liquidity, their cash and cash equivalents are strong and growing. They have $7.9 million in cash and nearly $3.2 million marketable securities at mid-2025. Working capital, which is current assets minus current liabilities, has slightly decreased. This is mainly due to a large increase in customer deposits, as we discussed. The big increase in cash from operations is a really positive sign showing good cash management and the impact of those customer prepayments. Finally, they state that their disclosure controls and procedures are effective, which essentially means they have good systems in place to ensure the information they report is accurate. So what's my take on SC Engineered Materials? This report paints a picture of a company facing significant headwinds in terms of sales, volume, and revenue. The sharp decline in revenue is concerning, however, the improvement in gross margin is a bright spot. It suggests they are either getting more efficient or have pricing power with their customers. But the heavy reliance on just 2 customers is a major risk factor. Any disruption with those clients could have a devastating impact. The increased general and administrative expenses while revenue is down also warrants attention. On the positive side, their cash position is solid and they are generating more operating cash flow through better management and customer deposits, and they've improved their profitability as a percentage of sales. The reduced spending on research and development could be a double-edged sword, potentially impacting future growth. If not carefully managed, overall EC Engineered Materials is navigating a tough market, but their improved margins and cash generation are strengths to watch. Alright, that's our breakdown of SCI Engineered Materials' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.